What's up, guys? Welcome back to another episode here of the BlockHash Podcast, #1 resource for all that is happening across the emerging tech space. Be sure to like, comment, and subscribe wherever you listen to or watch the show. Today, I'm joined by another fantastic guest, Andy. He's the founder and CEO of Wyden. Andy, welcome to the show, man. It's a pleasure to have you on today. How you doing?
Thanks for having me.
Excited to chat with you today and learn more about Wyden, what you guys are up to, and with digital assets in this market and institutions. It's been a big talking point throughout 2025, and it's been a big staple point of this industry for a while now. But to kick things off, before we kind of dive into everything and start chatting about it, maybe tell us a bit about yourself and your background. I'm sure people would love to know maybe a bit more about what you did prior to this space and what maybe kind of puts you on a trajectory to becoming founder and CEO for Wyden.
Sure. Yeah, I've done many things in my life. I used to be an Air Force pilot in my younger years here in Switzerland. I worked as a consultant for a number of years, project manager. I led some interesting projects at the Swiss intelligence agency. So kind of like the CIA or the NSA, just a little bit smaller. I could tell you a lot about that, but I'm not so sure.
We should talk about that one of these days. That sounds cool.
Yeah, and I started a number of companies, most of them in software, but also in other areas. This is my sixth company. Before Wyden, I was actually a partner at a hedge fund, and we traded quantitative systematic trading strategies, so fully automated trading strategies. That's actually how I got into trading. About 12 years ago, I started the company. Back then, we were called AlgoTrader, and we specifically focused on quantitative hedge funds. So we provided them with a platform to trade automatically, mostly stocks, FX, derivatives, and fixed income. Did that for a number of years. We got into crypto in 2017, more or less by chance, actually. We had multiple clients that were using our platform, and they asked if we could connect them to crypto exchanges, Coinbase and Mt. Gox and whatnot. So we thought, all right, so we got customers, they're paying for it. Why not give it a try? And look, now we're doing 80 plus of our revenue with crypto. We still have clients that trade traditional assets, and some even trade both, but definitely the majority is crypto. So that was the first pivot point. We had another one 2.5 years later, when we signed the first bank here in Switzerland. The first two crypto banks went live the same summer, and Signum, joined with us. We've been supporting them ever since, and that got us thinking that maybe at some point this is gonna be a banking business. Back then, it was all crypto natives, and we thought maybe it's worth focusing on that segment. So we transitioned, we rebranded also from AlgoTrader, which was a very bad, stupid name, to Wyden, which I believe is a much better name. And now for the past 3.5, 4 years, we've been focusing primarily on the banking sector. We're serving a double-digit number of banks now across Europe, Middle East, Latin America, and growing. So that's us.
That's really cool, man. You got quite a background: Air Force to Swiss intelligence to quantitative trading to crypto. Like the most interesting man in the world.
Well, I like building things, and I must admit, I'm not 20 anymore, so I had a few years to try out different things.
Well, we're definitely doing a part 2, and it's not going to have anything to do with crypto. We're just going to talk about your life. That's awesome. So tell me a little bit about Wyden then, and what you guys are kind of focused on. Maybe what's your guys' main core mission you're trying to achieve when it comes to maybe tackling some of these core pain points with institutions that are having a hard time addressing certain things with legacy systems.
So, at its core, Wyden exists to help institutions trade digital assets with sort of the same confidence and discipline they expect from traditional markets. When these institutions enter the space, they realize that the space is very fragmented with hundreds of exchanges and brokers. It's operationally intense. Settlement is a nightmare still today. And the one thing, everybody in crypto is completely used to, but for financial institutions, it's actually something new, is the 24/7. They're not ready for that. Banking systems today, they don't work 24/7. So the problem is that these systems are simply not built for this environment. And institutions hit challenges around integration, regulatory reporting, and so forth. We are here to help. So we provide banks with an end-to-end system to trade and manage and settle digital assets. So to connect them to all the exchanges and brokers and market makers out there, to fully automate all of their processes from pre-trade to trading to post-trading. When financial institutions get into the space, they often stand before the question to make, so to buy or build, and buy means using vendor systems like Wyden and Fireblocks and Ripple, or to fully outsource. And that's a question that they are facing, and that has pros and cons. We, of course, we come in when the financial institutions decide to build their own setup and combining various vendors. And these are often very interesting projects, because this is new ground for financial institutions. There's a lot of new processes. It's new assets. For the first time, a financial institution is dealing with an asset where their banking system is not the data master. It's the blockchain. So far the banking systems, they're always the data master. So they're the master system of the assets. With blockchain, that's no longer the case. It's the blockchain, and basically all transactions are mirrored into traditional banking systems. That's a paradigm shift that financial institutions have to get used to, and we assist them. We're there from day one, all the way to their go live, post go live, support them. You could think that once such a system is in place, everything is fully automated. Yes, it should be, but things move and change all the time, and this space still is not as reliable as traditional markets. There is outages. There is non-standard protocols. Every exchange has its own API. There is no standard protocol, so there is a lot to do on a day-to-day basis.
Yeah, it's going to take a massive paradigm shift. I feel it's amazing to see this kind of work, though, to fix some of this stuff with legacy systems, because everything that they do today is, able to go down on a spreadsheet and is within the confines of certain rules and fragments and regulation, and crypto's not 24/7. And it's a global market that kind of exists everywhere and anywhere that you can think of, including in your pocket or, through DeFi. And there's so many different factors that make it very hard, I think, for an institution to participate in a nascent space like this, where you have such fast changing innovation and different products all the time, different ways to use those products. And it's like, how can they record keep and record everything that's going on and manage things for a client? And it's a lot to keep up with when you have a system it's like having a computer that's not capable of running new software. It's just really difficult stuff. What type of institutions are you getting the most? Do you think are getting the most value out of you guys at Wyden? Are these usually banks or brokers? Are they asset managers? What do those kind of look like for you guys?
It's definitely banks and brokers. At the moment, we've been working with banks for the past 4 or 5 years already. Now it's also the broker segment is picking up a lot. Usually, we come in when these institutions move beyond pure experimentation. And they're getting ready to build a scalable, regulated service. So either tier one banks, larger broker, established platforms, firms that already have their or see their client demand and they see the strategic relevance and now need an infrastructure that can support real volumes and meet regulatory expectations. It's interesting that often the demand from retail clients is there, and for some time the institutions kind of look away. They see it, but they don't take it seriously. So it takes a while for them to realize and really see the demand on all levels. Here in Switzerland, we have seen, or a number of banks have looked at their outflows, and these outflows to large crypto exchanges have been so significant that it alerted the institution all the way up to the top, and that then led to projects. But it often takes a while. So once they do implement these systems, they're often a little bit surprised in how much volume these new offerings generate from day one. So I have not yet actually seen an institution regretting the move. Yes, it has a bit of a cost, a price tag to it. You need to build a new team and to build up expertise, but none of them actually regret it. Some of them, some of the banks we have been working with from day one, they have been able to turn the crypto business in one of their main revenue generator. And who is it typically? Typically, it's institutions that are adding digital assets on top of their equities and FX brokerage business. That's usually a good fit. Primarily retail use cases. It typically starts with pure spot crypto. And then maybe phase two is deposits, withdrawals, then possibly margin trading with leverage, then derivatives, that might be CFDs or perps or futures, staking. So it always starts small, but then the appetite for more is there pretty quickly.
Okay. Do you have any examples that maybe you can share that are public of some of that give and take? Because I imagine there's probably a time and cost for them to do this, but at the same time, the benefits probably outweigh that, being able to offer digital assets in certain capacity and integrate them into their systems. But also curious maybe what other benefits they're seeing from this. Maybe they didn't anticipate working with Wyden. What can you kind of share in terms of like some use cases?
Yeah. So, good use cases is obviously a Signum Bank here in Switzerland, one of the crypto banks, the first one we had. They push a lot of volume on their side, and they have. They're sort of a B2B bank, so they serve multiple banks on their side. Also started with spot crypto. We're also Bader Bank in Germany is a very good example as well. They are probably the largest provider of German and European brokerages. So they're also a B2B bank, and they support various use cases from retail spot to leveraged to almost HFT use cases. We have a very interesting case in Turkey. That's Garanti Bank, a subsidiary of BBVA, the Spanish BBVA, one of the largest bank in Turkey. Turkey is a very interesting market because of the local inflation. Crypto is extremely popular. Every second Turkish citizen has traded crypto before. Every third has a Binance account, so they're all very familiar with it. And now, banks got into the space because there is, since the beginning of the year, a regulation in Turkey. So Garanti was the first really tier one bank with an offering. They actually built an internal marketplace, so like an internal exchange with a matching engine, and we provided them basically with the entire infrastructure. And there is another one. Sorry, just one more. I cannot disclose the name yet. The fourth largest bank in France with 35 million customers will go live. Hopefully in the next few weeks. And also there, we are providing the entire internal infrastructure. This is going to be, once they're live, the largest crypto retail banking offering the world has seen. There have been bigger names, like Goldman, of course, but nobody has launched a spot crypto offering to 35 million customers at once. That's going to be huge.
Wow, that is exciting. So are you guys seeing a lot more exploration moving towards implementation now,
Yes.
I guess?
Yeah, absolutely. This is, well, it probably took a little longer. When we got into this in 2020, we thought, it's all going to be there in a year or two. It took a bit longer. I'd say the past 12 to 18 months, really, things have been picking up. There is probably not a single tier one institution that isn't actively looking at the space. A good indicator for us is usually the number of RFPs we participate. At the moment we're working on 4 RFPs in parallel, and this is usually a lot of work. You're talking literally hundreds of questions. That's from 200 to 800 questions that you have to respond. Usually you have 2-3 weeks of time, and you got to have everything ready. And if you have 3 or 4 of those running in parallel, that basically means half of the organization is filling in questionnaires.
One thing I want to ask you about is single broker models, because I think it's quite detrimental to a lot of these institutions to have it kind of offered like on a silver platter in a certain way, with everything kind of outsourced away from them, kind of like what Coinbase does. And no shade against Coinbase. I love them and have done plenty of interviews with them too. But I think when you do that, you kind of take away from their ability to build out real infrastructure. Just kind of curious on maybe the strategic downside of that approach.
I was hinting at it in the beginning a little bit. The question, single broker or fully outsourced. That's if you decide to fully outsource, and outsourcing, by the way, is something the banking industry is very familiar with. Banks very often outsource a part of their business to someone else. That's how they work together. So this is a model that's simple to implement. It's cost effective because you have no upfront cost, right? And it's an attractive model for early adoption. Now, the downside is that institutions, they give up their independence, and often a large part of their revenue. So the single broker model and outsource model, how that typically works is, you basically give away your clients to your outsourcing partner. They operate everything for you. They do the custody, the trading. So the end client, gets a front end or mobile app where they can trade. But everything happens with the outsourcing partner. And the financial institutions, they get a percentage. Usually that percentage is quite small. And that's a good model at the beginning to get started. If the demand is there, and usually it is, banks realize quickly that they're giving up quite a substantial part of their revenue potential. So then, in the second phase, usually the vendor selection comes up, and the question, should we build something in house? And then, of course, there is also the concentration risk. One counterparty becomes responsible for the entire execution, quality and custody and operational resilience. And recent events, October 10th was a good example. Even Binance was down and had difficulties. They make institutions a bit cautious about relying on a single outsourcing partner. So, we offer a model that preserves simplicity without giving up control, and institutions can access multiple venues, multiple custodians, multiple OTC desks, settlement workflows, and maintain that in one automated operating layer. And they maintain ownership of the routing logic, the fee model, margin model they want to apply, the strategic decision on which trading venue to work with. So both models are valid. The outsourcing is a good starting point. If the business is there, meaning the trading volume is there, then usually it goes in the other direction at some point.
So from your vantage point, being there in Zurich, what do you think this kind of eventually looks like for the industry over the next few years in places like Europe? Like, what direction are we heading? Like, are we going to see institutions fully immerse into this space? Is it still going to take a lot of time? Do you think certain products might be more clear earlier on than others? If you had a magical telescope to the future and you could look 3, 4, 5 years down the line, what do you think that looks like?
I mean, look, crypto has established itself as an asset class. Switzerland was maybe a little bit earlier than other jurisdictions just because of the Crypto Act and the Silicon Valley. I can just speak for Switzerland. Here you expect your local bank to offer crypto. And the same is now happening in Europe, the Middle East, and now rapidly also in the US. It's, for us here to see what is happening over there is amazing, the speed you guys are pushing forward. How I see the future, crypto is the starting point. Crypto right now we're seeing as a new asset class, but what is the underlying strategy? Crypto and blockchain is a new way, a new technical infrastructure for the financial industry. And my assumption is, and our belief is, that a few years from now, every type of asset will be tokenized. There won't be this difference of traditional assets and crypto assets. It's all going to be the same. And finally, we have seen the first licenses for tokenized security exchanges. That's what was missing for a long time, the secondary marketplaces. And they're here now. What we still need is the real use cases, right? That's still a little bit missing. So right now, today, crypto is the only revenue case there is, and we're waiting for real use cases for tokenized securities, but they will come. And a few years from now, you're not going to be talking about crypto versus traditional. It's all going to be one thing.
Yeah, I agree with that. I think crypto is going to be a little bit more of an old school term eventually. And it sounds weird to say that, but again, everything will be tokenized. There's no reason once you get the systems right to not put everything on blockchain. And it's just much more efficient that way. Save much more money and much easier for people to better, more modernized financial system that leads to a lot more opportunity and products for people. And so, yeah, I think everything will be tokenized. So I don't. It's a good point to make that we're not going to delineate and say that there's just the assets we have, and then there's tokenized assets, and there's DeFi and TradFi, there's crypto, and there's fiat, and it's like it's all going to come together.
Probably crypto will be a little bit less sexy that time, when you can just buy crypto at every bank and your grandmother and grandpa buy Bitcoin. Is it still going to be? But it doesn't matter. That's what we all wanted, that it is integrated into our daily lives and that everybody has access, and it becomes a normal as a class. And that's what we all stood out for. And even though a Bitcoin and an ETH, the underlying asset might not be that sexy anymore, there will be new use cases, new inventions. Innovation is there and is going to come up with new things. So I'm not worried about that.
Yeah, an interesting thing I wanted to bring up is I saw that the privacy coin sector has really been getting some steam lately. I think some of it's kind of driven by like Zcash having this massive rally in the charts and then its pricing. But there seems to be a lot more consensus that there needs to be more privacy things baked into legacy systems that are starting to build out infrastructure for crypto. Because then you run the possibility that you lose your ability to have certain privacy or control over your transactions, depending on where you are in the world or where that institution is. And you're kind of even further at the behest of what they do with your money. Is that something that you guys also kind of think about, like finding a way to balance both that level of transparency that you can get with blockchain with solutions to also protect the end user or the client or the business that may also want certain discretion at times, or that may also want just, I guess, peace of mind that they own their money. I feel like that's probably a difficult thing to do, and it's probably a tough balance, but something that I can imagine will be important in the future.
For us, it doesn't really matter whether it's a privacy coin or not. We support whatever the exchanges and brokers support that we connect to. We support whatever the banks want to offer to their clients. And usually that's a small number, top 10, 15, 20 coins that the bank offers. Of course, everything under regulation and privacy and regulation, that's a different topic. I think there is going to be quite a bit of development in there. Of course, you want your privacy. You don't want anyone else, your friends, seeing what you're doing. But under regulation, there needs to be a way for authorities to see what's happening. And that's a technical challenge, right? And I think if you are banking your crypto, you're basically dependent on what the bank is comfortable with. And right now, privacy, coins, and banks and regulation, that doesn't fit yet together. There is still work to do.
And then what's on the horizon for Wyden heading into 2026? What are you guys going to be the most focused on? Do you have any new, I guess, use cases or clients that you're working with that you're doing some interesting stuff with, or new things that you guys want to offer in terms of solutions? What's kind of on your guys' roadmap?
Our goal is to basically provide the end-to-end infrastructure for financial institutions, support all their use cases, connect them to all of the banking systems they use, to different custody systems. More and more we're seeing banks that use more than one custody vendor. So it's going to be a lot of new products, just supporting the various trading use case. Like I mentioned with the Turkish bank, we recently launched our own matching engine, so kind of like an external exchange. There's a lot around derivatives that we're working on at the moment. This is always so that the bank can offer derivatives to their clients. We came to realize that when we are serving a bank versus a broker, the requirements are a little bit different. With a bank, it's typically spot crypto, only deposits, withdrawals. On the broker side, it's usually margined leverage product, derivatives, so different use cases. And of course, if you're dealing with a small number of smaller banks, that's different for us than it is now dealing with these very large organizations, tier one banks. So scaling, making the organization ready to support multiple of these very large customers at the same time, that's a big focus for us.
And then where people go to learn more and to keep up with everything you guys are doing at Wyden when you guys have new use cases with clients that come out and you talk about different solutions that you're helping them implement. Do you do that through your website or through a blog? Do you do it through socials? Where can people go to find that stuff?
Yeah, go to our website, wyden.io, or our LinkedIn page. We're quite active on LinkedIn. Follow us on LinkedIn, or me personally also post quite frequently. Yeah, that's probably.
Sweet. Andy, I appreciate the conversation, man. This has been really great learning about what you guys are doing
Thank
for
you.
institutions with digital assets. I think it's very, very important because I don't think they would do it themselves without players like you. So definitely keep up all the great work and let me know how things are going as you head into the new year. And again, we'd love to do this again as well for a part 2. And maybe if we're lucky, we can meet up in person and do it as well. I
Would be
got to
great.
learn about your past as well. I have a lot of questions.
Thank you. Thanks for having me.